Gupta is joining us. He's, of course, the director at Nuvama Institutional Equities. Rohan, I think we have you at a very opportune time because we're trying to decode in our head what suddenly happened that we're seeing a spike in these names. Maybe the street wants to hear your views on the same. What's your sense? Has it bottomed out? Because for the longest time, specialty chemical has been dealing with one headwind on another. Finally, is there light at the end of the
Amini, hi, good afternoon, and thanks for having me on your channel. Yes, first of all, you are absolutely right that the specialty chemical sector has been quite a lot of disappointment for their investors in last 4 to 6 quarters. The sector has not participated in the entire rally while we are seeing the mid caps and small caps are making new high. This sector has been definitely not performed well. So if you ask that is anything significantly has changed for the sector, we say no. But yes, few things are definitely positive for the sector. Like we understand that the earnings have bottomed out in Q3, and from Q4 onward, we should be seeing a sequential recovery in earnings for across the specialty chemical basket. Maybe a couple of names here and there, but otherwise across the sector, we see that the earnings have bottomed out. Second, from last 2 to 3 days, we are also seeing that many of the commodities names are also buzzing. Also, some positive data points are expected to come from China. That means the demand in China also is expected to pick up. And last year, we have seen that Chinese players have dumped the material in the market and have pushed the prices downward. So all those things, those fear are now slightly getting off the markets, and that's what we are seeing that the positive implication is there on the even the chemical sector as well. So that's what my reading is right now, that the earnings have bottomed out, the global commodity cycle have started reviving. That is also going to have some impact on the follow-up impact on the chemical sector. That's what the many of these stocks are reflecting right now.
Right. Good afternoon. This is Vinny joining in the conversation. Just further a bit more on that. And what we talk about when chemical companies, how are they actually seeing leveraging that CDMO, CSM business side and the China plus one strategy, European one strategy? How will that play out for the Indian companies?
So we need that the structural growth opportunity, which we say for the specialty chemical players, especially in a like CDMO, China plus one, Europe's energy crisis, and Europe plus one, all those structural growth driver are there in last 1 year also, and even right now also, we see that they remain intact. But in a shorter term, in last 3 to 4 quarters, the market was more impacted in chemical because of the low demand and also inventory destocking across the sector. So that has impacted the short-term demand, but the structural drivers, whatever we are talking about, they are very much in place with the economic recovery in global market. India demand still remains very solid. Import replacement and also Atmanirbhar Bharat, all these things are already driving the chemical manufacturing and companies investing in capex. All that is already there. So I don't say that that these structural drivers were missing. It's just about that the sector was out of the flavor for the last 4 to 5 quarters because of the near-term headwinds. But now it looks like the headwinds are over now, and we should be seeing the sequential recovery in place, while the structural driver already in place. So we see that the sector is definitely going to drive at least 20% plus kind of earnings growth in future for a longer period of time.
20% plus kind of earnings growth? So finally has bottomed out. But let's get stock specific, Rohan. Who do you think would be the biggest beneficiary in terms of the export opportunity that Vinny was also talking about? Aarti, Vinati, SRF, these were the stocks which of course have high exposure in terms of exports as well. So apart from the import substitution that you're talking about, specifically from an export point of view, which stocks will stand to benefit the most?
So Amisha, if you see that the chemical story is domestic as well as exports, almost most of the companies have a balance of both domestic as well as almost 40 to 50% is catering to domestic and 50% goes in exports. Right now, we are more bullish on the companies which have both opportunity, not only just domestic but in exports, but they should be also having the ready capacities. I think that the company like Aarti, Grevia, Gujarat Fluoro, Galaxy Surfactants, all these companies are already sitting on the ready capacities because they never ever stopped on the capex even in a weak time last year. And now this is the time for them to enjoy the operating leverage. see that the companies like Aarti, Jubilant Ingrevia, they have done a lot of work in last 1.5 years, but that got neglected. Jubilant Ingrevia has invested significantly in chemistry. They have already expanded the pyridine-based product basket. So many of these companies have done all these things, but that was not noticed in last 1.5 year. I think that now this time has come for these companies where operating leverage should also play, and demand environment with the improvement in exports market, these companies should be able to deliver on a higher sales growth. So my picks right now, I will be positive on like Aarti, Jubilant Ingrevia, Galaxy Surfactants, Gujarat Fluoro. Some of these names we see that are going to be the beneficiary.
Right, and Rohan, just one more thing, you did mention the names that are going to be the beneficiaries, but any particular companies that are facing major issues, one in terms of the Red Sea issue, anything in terms of that, and as well as in terms of the inventory challenges that some of the companies were facing, any specific ones that would see a major impact, especially, earnings around the corner. So what do you expect there?
So yes, agrochemical scenario in global market is witnessing some improvement, but it still remains under challenges because inventory destocking in some of the markets are still not over, and some of the companies have yet not seen earnings revival. Red Sea challenges, that is across. Some companies may see some more impact, but I think that is a short-term crisis that is mainly getting reflected in an increasing logistics cost. Some of the companies who are able to pass it on, they are unlikely to be impacted much. Companies like Galaxy Surfactants and all, definitely these companies are facing the Red Sea crisis, Fine Organics and all that. Even the company like Anupam Rasayan and all, these are the companies which may see because of the over dependency on agrochemicals, they still may see that maybe in the current quarter also may remain muted, and the recovery may start only from the Q1.
Okay, Rohan, on that note, we let you go. Good speaking with you today. So clearly,
if you like this video, then like, share and subscribe to ET Now.